Yo, yo, yo. This is crazy because it started so fast because we're pre-recording this, because by the time that you all see this, it's going to be a holiday. But today, it's the day before the holiday, but we wanted to make sure to have a show on Good Friday because not the entire world observes Good Friday. Anyways.
Why would you tell them that? We could have just seamlessly faked our way through.
Because what's going to happen is we're probably going to post-production this a little bit between now and tomorrow. And our normal flubs and gaffes and your internet rugging you won't appear. So it'll be obvious that it's not.
You know that I post-prod it every day, right?
Well, yeah, but it's live usually, right? So you
but you can go on YouTube and cut out like the rugging.
Yeah, whatever. I usually say something stupid in there and it's probably good for a laugh. But anyways, so today, which is effectively
Friday,
episode 38 of Go Fudge Yourself. JD Gagnon here, my good friend Ceara. What are we talking about today?
I'm stoked about today because it's CBDCs. And part of why I picked this is that it comes up in our everyday conversation, almost every episode where I obsess about the crypto arms race, we talk about CBDCs. But also, I know that you like to say FU to CBDCs, and this is coming out on a Friday. So I just thought we could kind of combine the two elements. But we are going to talk about Central Bank Digital Currencies. We're going to talk about the pilot projects, who's involved, who's not involved, who canceled them or has inactive projects and why. We're going to talk about the motivations for them, the FUD on them, and also why they maybe shouldn't happen or are going to happen. Is there anything else? You want to talk about anything else about CBDCs?
That'll probably keep us going.
Lot.
That's a lot. Let's do it. All right, welcome back. I do have to say, though, the amount of work that you put in researching this shit makes you, I think, the world's foremost expert on CBDCs. So anybody that's watching, we all have the pleasure of the world's foremost expert on CBDCs.
Okay, I doubt that. Maybe I'm like top 20. No, I'm kidding. I'm not even that high up on it.
Top 20 in my friends group, and I've got 2 friends. So anyway, go ahead.
No, I just wanted to make sure that we were representing them correctly, that we weren't misstating anything about what countries are doing or what countries might be doing. And in numbers, 114 countries are exploring CBDCs. So I just think it's important I don't have the direct information on 114 countries, but I made sure to be updated on what people are currently doing, what kind of projects were deactivated, what's going on in the news with them, just so that we could give you an accurate representation of this instead of just JD's negative sentiment.
If we tried to outline what all 114 countries are doing, it'd be a complete snooze fest.
Absolutely.
So I'm glad we're not doing that.
I actually talked to our graphic designer about putting together a map about what all 114 countries were doing. And before I realized there was 114 countries, I had offered to do a video about every single CBDC. And he told me to go fuck myself.
Go fud yourself. Yeah, that would be a lot of work for them. I was also thinking, do you know what's interesting? I heard somewhere, somebody's Twitter, I think, that there's 156 Hard Rock Cafe restaurants and 114 CBDCs. So Hard Rock is still winning until we get to 156 CBDCs. I think
that's just the restaurants, though. It doesn't include the hotels.
Speaking of which, the Hard Rock Hotel in Fort Lauderdale is something else. I think it's
you can tell this is a Friday episode. We're already in Friday mode. Okay, CBDCs. What is the point? No, what is a CBDC? So a central bank digital currency is a currency by the central bank, but is digital. So how is it different than fiat, JD?
Yeah. So, well, that's a bit of a moving target. They're not all that different in some cases than fiat currency. They should be different in the sense that it should be completely immutable and on chain. Which is the whole point of blockchain relative to the old way of doing things. Unfortunately, my biggest criticism is many of them are not being investigated with that in mind, but rather trying to capture the benefits of blockchain while still maintaining all of the control that they have their current currencies issued by central banks.
It was interesting looking into this, actually. A lot of them avoid the language of blockchain. So the closest I got, more or less, was distributed ledger technology, which is blockchain. But I thought it was interesting that they're vying away from that term, both because of what you say, power and control, but also potentially the negative sentiment surrounding blockchain and crypto.
Yeah, for sure. I definitely agree. I think, yeah, it's interesting. It'll be interesting to see how this all actually plays out, because I mean, there's some people that might argue that this is effectively just getting rid of cash. It's no different than, in many ways, it's no different than our current fiat, with the exception that there's no cash anymore. All of the controls, and actually there's way more controls with the CBDC than there is even over our current banking system, because they're at arm's length from the federal government. Now, we've all realized over the last little while that most federal governments have their thumb on the scale, and are actually more involved in oversight and control of banking nationally than we ever thought possible. But with that being said, there's some people that might argue that all of these CBDCs are just a way to get rid of cash, because cash is expensive, and is probably, well, not probably, is for sure the largest use case of the largest opportunity for money laundering and many other things, drug trade, all that. Yeah, we talked about that.
How is a CBDC different than a stablecoin?
Yeah, so stablecoins, well, again, each CBDC is going to be slightly different, but a stablecoin is just, here's your fiat, there's $1 in fiat stuck somewhere that represents your one USDC, as an example. The problem is, well, not the problem, but the design of CBDCs are intended still, in many cases, to facilitate monetary policy. So they can print more without necessarily collateralizing anything. It's very similar to what they do with the US dollar, and all of these other currencies. Here's a problem. A lot of these nations that are trying to do this, of the 114, there's a whole bunch of them that have already screwed up their own currency due to improper monetary policy, which is why they're saying, well, our currency sucks, so let's try this and maybe level set ourselves to print a bunch more money again. So again, my bias here is pretty obvious, I think. I think CBDCs are, although they will add potentially a lot of uses of blockchain, the way that they're going to be used is almost the antithesis of blockchain, really. And so I guess philosophically, I'm at odds with CBDCs. And I think if we use any of our historical experience as a somewhat of a predictor of what's going to happen in the future, this is not going to end well.
So I have a few different motivations I've identified as to why a nation might want to have a CBDC. Okay. Can we run through those briefly?
Please do.
So the first one is sovereignty. One of the things that we talked about on the Thursday episode was that BRIC, so Brazil, Russia, India, China, South Africa, are looking at having a joint CBDC, essentially, so that they don't have to rely on USD anymore. And the instance of this is that these countries and other countries looking at CBDCs might have more sovereignty. They're not going to see cash from other nations come through. They're not going to see digital currencies from other nations come through. They get to be their own entity.
Yeah.
No? Yeah.
They do, but I mean, sovereignty over what? Like, define sovereignty. Is it sovereignty for the government over the people, or sovereignty for the people over other people?
In this instance, the way that it's framed, I'm not saying this is the truth, but the way that it's framed is that they would be sovereign from other nations. Now, where I don't understand this is if we all have CBDCs, you're no more sovereign than using the traditional fiat. Yeah.
So those things are being conflated, I think, in a lot of cases. So there's two kind of separate uses for CBDCs. One is it's a technological advantage if done properly to the current system globally. Period. End of story. Two is it is a means of trade and transaction, of course, but the same way that every nation, not every nation, but many nations had their own currencies for all of human history. Most was settled in the US dollar because it was the most trustworthy of currencies. Now, what I don't like about the motivation for sovereignty from other nations is that the only reason that any of these countries want to do this is because they have sanctions from the US and other Western countries for doing dumb shit. Now, doing dumb shit
that we think is dumb. Maybe they don't think it's dumb.
Exactly. That was going to be my point. I was about to say it's dumb shit from our paradigm. From their paradigm, it might not be dumb shit. But the point is that as a global society, we are much less safe and secure without having a reserve currency, a global reserve currency that's monitored and maintained by some Western democracy. Having said that, we squandered our opportunity as the US for the last 100 years and made a whole lot of eyes wide open, incredibly predictable, horribly bad decisions that have led us to where we are. And now...
So I don't buy the sovereignty motivation. I don't think that it's strong enough on its own, but it does bleed into power and control. And of course, no country has published, we're developing a CBDC because we want to be more powerful and have more control. Nobody has said that. But when you read the underlying tone of the sovereignty discussion, it turns into power and control. We want power over other nations. We want control over other nations. We don't want to have to adhere to economic sanctions. We basically want to be immutable in this sense. And then what you like to talk about is power and control over citizens. So power and control over spending, power and control over where your money goes, how you use your money, and who gets to use money.
Well, and again, I mean, not to say that this isn't possible with third parties. I mean, again, we can use the US as an example. Social media in many ways has become an extension of government agencies to track, monitor, assess, silence people that have a viewpoint that is not in line with theirs. And that, again, is significantly problematic, I think, for society. This is no different. This isn't saying that it's not 0 to 1 in the sense that there was no opportunity for oversight and control before, and now this is blanket opportunity to do so. This just makes it direct. So before, the agencies had to kind of subvert, public awareness of this and like do a lot of it behind the scenes, kind of in a sleazy way, in my opinion. If a CBDC, it's all transparent. They've got all of it, and they have pure control over the token contracts and what happens. I mean, and we're seeing this again. USDT and USDC is in many ways not decentralized and completely immune to this too. When there's a sanction, the 3-letter agencies in the US or Interpol or whatever can request that USDC or USDT freeze assets, make them non-transferable, et cetera, et cetera. So that shit already happens. The difference is this will be direct, and they can do it without the public knowing generally. And that could be a huge problem. And then it invites at least the perception of a social credit system, and they could say, oh, well, you're not eligible for tax credits because you spent money on a gun this year, or you,
for sure,
whatever, or you have a gas guzzling vehicle instead of an electric vehicle, and so we're gonna give you extra tax credits because you're supporting our oil and gas. Like that, all of that would be ridiculous. So, sure. But that's what's gonna happen.
So what's interesting is that nobody publishes that they want power and control, and that's the intention. In fact, they publish the opposite, that they want equal financial access. So they want exactly the opposite of what you're talking about, JD. And the only use case I found where this has been successful was increasing that equal financial access. But that's also purportedly successful, right? But so the interesting idea about equal financial access is that there's the unbanked. So one of the first countries to look at doing a CBDC was actually Egypt in 2018. And 84% of their population was unbanked.
Yeah.
But if you're looking at equal financial access, you don't have a good understanding of who's actually using your cash and who's using your fiat or who's using other types of financial access. So really, this again comes back to power and control and understanding who's using what and why, and seeing how money is used and tracking it. There are some cases that say, no, it'll be totally anonymous. It'll be zero. That's likely not true. not to be only negative sentiment here today, but this is
the thing about zero knowledge. The thing about zero knowledge proofs, and this is important to talk about, though, is that there's zero knowledge to the public, but they're not zero knowledge to the centralized entity that manages the proofs before they get committed to chain. So They are decipherable. Anyways, this to me is a lot of smoke and mirrors. This equal financial access, all of that nonsense. This is kind of like saying, actually, this is very indicative of society at the moment, in my opinion. So society is saying we should all make, multiple six-figure income. We should all have to do all this stuff, but we don't have to do all this shit that you have to earn those levels of income, like go to school or build an experience set or be an entrepreneur or take risk. This is kind of similar to me. This is very indicative of global society right now, where they're saying, we want all these benefits, but we don't want to have to adhere to sanctions, and we don't have to play nice with the other kids in the playground, because when they're mad at us, they can put sanctions on us, and that's no fun. We don't like that. So to me, this is just like a huge smoke and mirrors.
Equal financial access is supposed to be more citizen-based. So it's supposed to be more retail-based, right?
Sure.
Now, this moves into a cashless society. So there's a component of wanting to prevent money laundering, prevent terrorism funding, and so on and so forth. Let's not get directly into that. But what's interesting here is when you think about equal financial access and who's going to access it, the targeted population ends up being a rural population or an unbanked population. And these are individuals who are less likely to have access to digitization. So we end up in a little bit of a catch-22 as to how are we going to give equal financial access to people who are restricted in the digital world.
Well, and there's so many considerations. So like rural in America is much different than rural in Ethiopia, right?
Absolutely.
And so some of the benefits of self-sovereignty and some of the benefits of control over your assets and financial liberation is that, well, you control your keys, you control your assets. The flip side of that is security is a huge risk factor. And in a lot of these countries where the rule of law is not quite the same, even in America, we're seeing crazy shit happening. To me, it's like saying, hey, you weren't using the system that's already geared towards you for whatever reason. Now we're going to make the barrier to entry more expensive, make the risk greater and your obligation greater. Please use our service.
So the other interesting thing about a
cashless
society, we'll get into this when we talk about some of the use cases, but one of the other things about a cashless society is if you push people away from cash, that doesn't mean that they're going to use what you want them to use. It means they will not use your cash, right? They might find other elements, and we might move back into some bartering that you see, which means actually less regulation on things like agriculture.
Back to garage sales, my dear.
I love it. I love garage sales. I love trades. I do lots of illegal food trading. You can't get unpasteurized. You can't purchase unpasteurized milk in Alberta. Just fun fact. But you are allowed all the time.
Growing up, we drank unpasteurized milk, and it's disgusting.
Yeah, it's so gross. Okay, so the last.
Wait.
Oh, you want to talk about milk some more?
No, I want to just quickly make a point about the financial freedom thing. Yeah. It's really important to notice, or to note here, that CBDCs are not DeFi. Mm-hmm. So the value proposition of DeFi is global access to financial products in a very equal access type of way, so that there is no structural prevention from becoming a have if you're a have-not. Mm-hmm. Okay. CBDCs don't change that. CBDCs are the same as the cash in your pocket, for the most part, just a different way to transact with it for the retail user. International trade, different story. Yes, it makes it. There's a lot of efficiencies there, but for the individual user, the retail user, that to me is a very misleading statement. Okay, so now we can move on.
The last motivation, again, this is not something that people are writing down, but it is important to think about and note, is that nations don't want to get left behind. Yeah. They see crypto happening. They know they can't regulate it in a meaningful way. They see exactly what you were just talking about. They see decentralized finance happening. They see monetary revolution happening, and they go, oh no.
Shit, we got to get on board.
Yeah, we don't want to talk about blockchain, but we will talk about distributed ledger technology and a digital fiat system, because that's the closest we can get without admitting that we're creating stablecoins.
Yeah, it'll be interesting. It'll be interesting to see how other jurisdictions recognize these CBDCs too, right? Because just because Nigeria comes up with a CBDC and says it's not a commodity, nor it's not a commodity, nor a security. It is a currency. The US may look at their structure and go, I don't know about that. I think it might be a security in our eyes or something. And so it's not quite as simple as a country just declaring that this is a currency no matter what. There's going to be a lot of nuance in between structural design and different things.
There's a couple of points on that. So one is that one of the biggest news pieces on CBDCs right now is what SWIFT is doing. So SWIFT is essentially pioneering interoperability between CBDCs. But they've been doing this, they've been testing this in a pretty privatized way. So they've actually run a 12-week pilot program with a number of international banks. I don't have the full list in front of me, but it includes BNP, HSBC, Royal Bank of Canada, Deutsche Bundesbank, and so on and so forth. And they've tried over 5,000 transactions to test interoperability. Basically, what they're doing is testing a smart contract.
Yeah.
Right. But then we see BRICS forming because they don't like that SWIFT is doing that, and they're thinking about how they're going to do that on their own. So we really, in terms of relevancy, we're not doing anything new.
No, not a whole lot. The thing about this is like, I think it's smart for SWIFT to try to find a way to implicate themselves. And they've been doing this, to your point, they've been doing this for a while. We've been talking to them on different fronts for different reasons for quite some time. And so they're definitely taking a serious look and making a meaningful entrance into the space. All of that being said, what led to SWIFT being so successful for the last however many years it's been in place, number of decades, has been their infrastructure. That's been the moat, is they've had global infrastructure to facilitate this with banks. They've had banks, they've had institutions, they've got specific infrastructure to manage SWIFT. You don't need that shit with blockchain. Like, you really don't. Like, you can, it'll still be centralized, of course. All of these CBDCs are going to be very centralized. No third party is going to operate nodes and earn revenue and all this other nonsense. But I mean, they got to find another way to build a moat. So by just offering support for interoperability between CBDC transactions, I mean, you can simply do that through a router. You can route and aggregate USDC into USDC or USDT. I can send you from my wallet USDC, and I can elect that I want it to end up in your wallet in USDT. That's already doable. I don't need SWIFT to do that shit. So they better figure out damn quickly what value add they're bringing in that regard, other than, well, we can sanction you if you don't listen. Sure, but that's why all these countries are doing it.
Since we're talking about banks, this is really interesting. Both Denmark and America have published articles and like actual research reports about how a CBDC would destabilize banks. And that's obviously something that's very scary for the banking industry. But the intention here is that there would be a reduction in bank equity, and that we would actually see digital bank runs where anytime there's a moat of instability, people would move their money from the bank into the CBDC. And although it's purported that this would likely be better for household financial welfare and diversified portfolios, obviously it's not great for banks. So what does that look like? What does a destabilized banking system look like alongside a stable CBDC?
Yeah, great question. Again, this is another reason I hate the concept of CBDCs, but it's incumbent bias, right? So unfortunately, we have to take a look at the impact on the banking system, because the banking system is so integral to the GDP of most nations. Mm-hmm. And so when everything is on the blockchain, there's no such need for a bank anymore in terms of just holding deposits. There is a need, there's other value to having banks, don't get me wrong. But at a very high level, a lot of that can be facilitated via smart contracts in many ways, especially now with more sophisticated custody and key charting and all these other things for security. Excuse me. But this is where I think it's problematic, is we're kind of cutting off our nose to spite our face in a sense. We're saying, hey, like, let's not innovate in this area because all of these guys who refuse to innovate for the last 30 years are going to be fucked if we don't pause for their benefit. Well, does that make sense? Like, should we let the antiquated business models continue just because they were in the incumbent? They became the incumbent because they did good shit back in the day. They're going to fall off the mantle as an incumbent because they're not doing the good shit that we all expected them to do. So other companies are now out there building that. And that's what kind of where my concern comes in. Like, we if we're going to do a CBDC, we have no choice but to try to cater to the concerns and needs of the banks. But at the same time, that kind of defeats the purpose.
So this is interesting because there are two different realms of CBDCs, ones that are going to be built by the government, so you know that it'll take 95 years, and there are ones that will be built by somebody private. And when you think about the cashless society, the financial access and the power and control, governments obviously want to build it themselves because then they have that ultimate power and control. But a surprising number of them are looking at not building it themselves, to build in a failsafe of having a private body be responsible for this. And Ripple is courting over 20 countries right now. The other large organization that has successfully involved themselves with CBDCs is MasterCard. So these are essentially like, maybe the other banks become null and void, but maybe these financial institutions become the new big players, right?
Yeah. So MasterCard, again, to me, this is like MasterCard, to their defense, have been very crypto forward for quite a while.
Absolutely.
And I'm grateful for that. They've been trying to find ways to add value in the crypto market and maintain a certain level of market share and profitability. But again, the fees surrounding credit card transactions are extraordinary. And they have had a monopoly, a duopoly, more or less, Amex, Diners Club, all this other shit. But Visa, MasterCard essentially are the two main payment platforms or the credit platforms in the world. There's no need for that shit anymore. No one needs to pay $200 annual fees, and no one needs to pay 29% interest and all of this other nonsense. Now, of course, unsecured credit cards, yeah, interest is expensive because the risk is huge. And it's very difficult to bring credit worthiness on chain currently. There's a lot of smart people working on it. I wouldn't be surprised if it happens soon enough. Mm-hmm. Again, what this comes down to for me is I don't care who the third party is. It's all baloney if that third party is beholden to the whims of the central bank. They might as well just build it themselves. Similar to right now, again, I may be on one side of the fence on this, but it's kind of like saying that most of the social media and mainstream media platforms in North America are beholden to the left. Mm-hmm. It's true. It's a verifiable fact. They're beholden to the left.
Or the right, depending on which side you're on.
No, the mainstream media is significantly left-leaning. There's a few significantly right-leaning media outlets, but they're not the mainstream medias, nor the mainstream social media platforms. Anyways, irrelevant. We could probably debate that for hours. I know we have a different opinion on it. But the point is that as long as the central banks are controlling it, they might as well just build it themselves because everything else is smoke and mirrors. Like having MasterCard do it, but saying, MasterCard, we'll pay you to do this. We're going to pay you way more than it would have cost us to just do it ourselves because MasterCard has to make money to facilitate it, a lot of money, if they're going to effectively cannibalize their other business. So it's going to cost the central bank way more money, and it's not going to save us or de-risk it for us because the central bank is still going to have ultimate authority. So to me, again, another smoke and mirrors. I'm super biased on this if you can't tell. So I do apologize to listeners that think, actually, I don't really apologize. The whole point here is for us to give our opinions. I'm not sorry for my opinion. It's my opinion.
So let's run through some of the actual projects.
All right, let's do it.
First of all, canceled and inactive projects. I need to talk about this because these are either projects that launched as a pilot and failed. There's only two actually that were canceled, and then the rest of them are inactive. So they did some R&D and they said, no, this isn't going to work for us. I think the most notable one is Egypt. Again, in 2018, they were kind of the leaders here. They wanted a solution for their 84% of unbanked peoples.
Yeah.
That's probably a power and control grab, but basically they did some R&D and they said, oh, no one's going to adopt this. Let's not bother. I think that's a fine stance to take. So long as they looked at it, it's not as though they've totally abandoned it. They continue to do R&D. They continue to look at proposals. But most of these canceled or inactive projects said, this isn't for us.
Where I'm a little bit fearful here, and this is evidence of such, is that, in my opinion, the only way that this will ever work to the point that the public actually cares about it is if market forces are allowed to prevail. So if you're given an option and you get to choose which option you're going to pursue. And so a lot of these countries like North Korea, Egypt, et cetera, their idea is let's put this out there and then force everybody to use it. I think you're going to get I just don't think it's going to be viable in a lot of these places unless they allow the free market to have its say. I'm fearful that most governments won't do that. They're not going to allow market forces to come in. And I mean, which is, again, when I look at a lot of those, like obviously Iceland, Denmark, maybe a different story, but North Korea, Kuwait, Egypt, Senegal, Bermuda, Ecuador, Uruguay, Argentina, like all of these countries are not immune to corruption and a lot of very negative things at the government level that have ruined their economies.
We'll talk about the free market making the decision in just a minute, I promise.
All right.
So pilot projects, these are interesting because they have moved beyond R&D and they have a use case scenario, usually between 5,000 people and 100,000 people. And that is what they're looking at. China is a really notable one here where they have over 100,000 people and they've been running transactions. But what's really interesting to note is that there are wholesale and there are retail options for CBDCs. And wholesale options are essentially how are banks going to work? How are we going to cross borders with our money? What does that look like? What do we need for reserve capital? So on and so forth. And retail is retail. How are end consumers, how are our citizens going to use this? And only China, India, Japan, Hong Kong, Thailand, Australia, and South Africa are looking at both use cases. So when you look at these pilot projects and the launched and active projects that are coming up, understand that most of them are actually wholesale and only a few of them are retail.
Yeah.
So this kind of changes the narrative of CBDC from power and control over peoples over power and control on an international scale.
Yeah. And for that reason, I'm more inclined to support those types of projects. That's a really good point, actually, that you made. Thank you for that. I'm more inclined to support the ones that are focused specifically on global trade. I think it's like anything, though. Unfortunately, it's a bit of a slippery slope. It might start there. Once you get adoption, the infrastructure is tested. It's only a matter of time, I think. You get a little taste of that power and control, and you're like, ooh, we could probably do that with all the currency. The other question I would have in those environments is how do you manage monetary policy between your fiat currency and your stable? Because unless you put the full weight and power of your central bank behind the CBDC, it doesn't matter. There's no value in it. That's what's backstopping. That's what's been backstopping the US dollar for all these years is the strength of the US economy. And that's how people value the US dollar relative to other currencies. How are they going to do that? Are you going to split it? Is it going to be effectively a print of money? I don't know. Are you going to
This is interesting because if we talk about launched and active, so ones that have moved beyond pilot, moved beyond R&D, they're not just limiting who's using them. They're actively trying to get users on board, especially in a retail sense.
Yeah.
None of them are huge economic world players. We basically have Nigeria and the Caribbean. So these aren't things that they have dealt with yet, and there is no precedent set for it.
Exactly. So CBDCs, in my opinion, work for countries that really work for countries that are using other countries' currencies as their national currency. Example, Panama, Mexico in many ways uses the US dollar. A lot of Caribbean countries were using USD as kind of essentially their currency. They can't manipulate monetary policy because they don't have their own currency. Most countries did at one point and printed themselves into super hyperinflation, and their currency became worthless, and then they started using something else. So all of the countries that are listed as launched and active are ones, as far as I know, someone can fact check us on this if they know otherwise, but as far as I know, did not have functional monetary policy capacity on their fiat currencies before they implemented these types of things.
Which was part of the use case scenario for the East Caribbean. So this is interesting because the East Caribbean, all the countries in the East Caribbean, they've all essentially looked at CBDCs and they have tried piloting them. We saw that some of them were canceled and are inactive, and some of them continue to be. And a surprising number of them were actually wholesale because they had their own CBDC so that they could establish monetary policy within the Eastern Caribbean and their direct trade routes. So it's not that they're blind to that, right?
Yeah.
And I think they are trying to set forth the experimental expectations, but they haven't necessarily succeeded.
See, I'm excited about that application. Like, I think that application for those examples in the Eastern Caribbean, there's a lot of Southeast Asian areas that that have lots of different countries, lots of different currencies, really close together, very intertwined economies. Foreign trade is a nightmare. So CBDCs make that orders of magnitude more efficient, obviously. And I think in that case, especially at the wholesale level, the international trade level, it makes a ton of sense and can add a lot of value.
So we have two examples. One is, they're both retail examples because that's what people care about. One is purportedly a success story and one is purportedly a massive failure. Are you ready?
Let's do it.
I'm going to start with success because I want to end on a FUD note, obviously. So the Bahamas released the sand dollar. And when they originally released the sand dollar, it was a pilot project in 2019. It only took 1 year before they released it as an actual project. They have over 100,000 mobile wallets, which is about a quarter of their population, assuming that people only have one mobile wallet, which I could not find any validation of, just to be very clear. And then they have over 1,500 businesses. But of those 1,500 businesses who accept the CBDC, only 450 of them are actively using it. So you now have 100,000 wallets kind of using this money in a retail sense. So they're now putting in, they're trying to onboard more businesses. They're trying to offer incentives to do that kind of thing. But what is really interesting is that they see a lot of peer-to-peer money moving this way. And so when you think about the cashless component, they have actually seen a lot of success in this. And they aren't really tracking why that money is moving around. And it is mostly very small amounts of money, but peer-to-peer has been the one super success factor in the Bahamas.
Well, again, to the comment we made before, remittance and remittance fees and all these other things for, international transactions, peer-to-peer is extortion. It really is extortion. And so this totally changes the way that families can support each other globally, and makes it a heck of a lot more approachable for many people, even though the security and some of that stuff is difficult. It's also worth noting in that story, and I'm actually going to reduce some FUD there in this case, but 450 businesses in a country of that size is a lot more than you'd think, right? If there's 400,000 people that live there.
So it's 6.8% of all businesses in the Bahamas.
Which isn't shit. Like, that was going to be my point. Like, that's a pretty good proportion of like businesses in Bahamas. And again, we don't have any statistics on whether that's large businesses that are using it, small mom and paws, like whatever. But I'm optimistic about the sand dollar.
I have to share two more things about the Bahamas. One, this has seen success because it is powered by MasterCard. People already know how to use a card. They already know how to use the digital app.
Yeah.
Powered by MasterCard. Two, they are having incentives, but they're not looking at monetary incentives necessarily. So monetary in the terms of discount and trying to tell you where to spend your money. But they are looking at basically airdropping about $1 million worth in the next couple of years, and also have hired ambassadors to go and onboard additional retail users from the business sense.
Yeah. So if you take a page out of Square's book, which is, I think, what they're trying to do here. What Square did, if anybody's interested, there's quite a few books written on what Square did. But if you look at what Square did, they said, okay, the problem with the payment infrastructure before Square was that it was very expensive. The terms and conditions were unbelievably complex. The point of sale technology was very expensive. The fees were crazy. Onboarding was intense. Square said, we're going to get rid of all of that. We're going to go to the businesses first. We're going to make a really cheap and accessible tech adaptation that will facilitate card payments. And we're going to make it super simple for businesses to get online. We're going to make the fees competitive, highly competitive, and everybody's happy. The problem here is a lot of these CBDCs, I have yet to hear much about their actual marketing and expansion plans. Most of them are saying, we're going to do this. Okay.
Well, let me tell you about the next one. So Nigeria launched an active CBDC that is being rejected as we speak. Nigeria launched their digital naira, and it hasn't gone well because the people don't want it. And basically, to force adoption of this, the Nigerian government first tried a couple of incentives. So you got discounts on taking a cab, which is very common in Nigeria. You got a discount if you paid with your digital naira. And you didn't need to have a bank account. And, a huge number of unbanked people who didn't want to create bank accounts. So they're kind of relying on that zero knowledge proof component. It didn't work. People still didn't want it and they didn't want to use it. So the Nigerian government started restricting cash. And there's actually a cash shortage in Nigeria right now. Last month, people were in the streets protesting about the cash shortage. But just for a little bit of clarity about how much cash shortage there really was, they restricted not only individuals being able to pull out cash, but also businesses. And so businesses could pull out the equivalent of just over $1,000 a week for a little bit of spending power understanding. A regular coffee in America is $3, and a coffee in Nigeria is about 62 American cents. So if you think about their spending power, that's a huge limitation. So they're basically trying to force the hand of you using this digital dollar, and people didn't do it. So they just stopped buying stuff and they went and protested.
Yeah, so I got a few thoughts on this. The African nations annually spend upwards of $40 billion on international money transfers. Lose $40 billion. Nigeria is one of the biggest countries in the African area that has a lot of people living overseas and sending money back to their family. So, of course, I think there's not too many nations that have more retail incentive to want to adopt something. Here's the problem. We talk so much about being unbanked, okay? But if you have no money, a bank doesn't matter. Mm-hmm. Like, a bank is only useful if you have money or if you're capable of securing loans. That's the whole point. Because the economy is so immature relative to what we're used to, it's a totally different game. It's like, until you provide opportunity, until you provide business and financing structures that are akin to what we're used to, the banking system doesn't work the same way. So just because you don't have a bank account doesn't mean you want one, or it doesn't mean you can do anything if you have one. So again, thinking about it through that lens, okay, so now you can have a CBDC. Cool. I still have no money and it still serves no purpose to me. So I think some of these examples, yes, I think the intention was maybe pure. I also have my reservations. One of our partners at Benki is Nigerian. He lives in the UK, but he's from Nigeria. So maybe we'll have to have him on. He has a lot of personal knowledge about Nigeria, in particular, blockchain. There's some incredible engineers and developers in Africa. He's not an engineer, but anyways, there's some incredible talent in those areas of the world. And I think there's a lot of potential there, but we've got to figure out some more macroeconomic challenges in those areas first.
Okay. So to wrap up,
okay.
Central Bank Digital Currencies. There's 114 countries engaged in research, development, piloting, or launching them. Mm-hmm. SWIFT is involved. BRICS is involved. There's maybe some good use case scenarios. There's several failed scenarios of people being unhappy. There's wholesale usage. There's retail usage. It's a really broad topic. So I don't know if you learned anything new today, JD, but are you still FU on CBDCs?
Mm-hmm. I'm still FU. I always learn stuff when I talk to you, of course. And hopefully we've helped to at least shed a little bit of light on this. I'm still current environment. I'm still pretty bearish on CBDCs as a general rule. I just don't see it going well. But I do like that there's a lot of activity here. I do like that there's a lot of jurisdictions thinking about it, because hopefully someone gets it right.
Well, go FUD yourself.
Go FUD yourself. Happy Good Friday, everybody. Have a beautiful Easter weekend if you're celebrating. If not, have a beautiful weekend anyways. We will see you on Tuesday. No show on Monday. It's a holiday in a lot of places. We will see you on Tuesday. Same place, same time, 12:30 Eastern. Share, like, subscribe, do all that shit. Go find yourself, Ceara.